Good afternoon, morning. Hello, everyone. My name is Dan Hussey from Zaner Hedge, bringing you our strategy of the week futures market update here for September 29th, 2023. Remember, trading futures involves risk and is not suitable for all investors, and everything I talk about here today is just my own opinion and not a direct trade recommendation. But if you are interested in getting active in futures trading or talking to somebody over here at Zaner for risk management or to, full service brokerage needs, or even just execution brokerage needs, we're here to talk to you. Um, my number and information on the bottom right hand corner of the screen there. And of course, check out every day our chief market strategist, Ted Seifried, is publishing his Zaner Daily Ag Hedge call. Sign up to get access to that in the information and comment section of this video as well to hear what our entire group is talking and thinking about on the markets. And, the conversation lately has really been, around the supply side of row crops, right? The balance sheet economics of row crops and where yields and ultimately acreage will be for the year so that we can figure out what the carryout's going to have gotten really slow. We have to remember that we're coming off of a couple years of very big swings. To take that step back to the weekly and the daily time frame to kind of see the bigger picture, see the bigger ranges, see the bigger pricing scheme that the market is arm wrestling over, and then take a dive back in. And if you haven't done that in a while, a couple months, 3 months, 6 months, oh my gosh, right? The different story and narrative that you can assign to the highs and flows and the ebbs and ups and downs of the market over this time frame to kind of really distinguish what was driving trends and everything else. So, without further ado, let's talk about the sleepers. The markets that might surprise us over the next few weeks and be things to really be paying attention to in the near term. But not much to say today. Basically, these first few markets, corn and wheat in particular, and to some extent, the meats as well, which we'll kind of finish with right before we go into some of our macros. Uh, but to start our row crops off, December corn here, and I guess I was going to start with December corn. Let's just go. I'm sorry. Let's go to December wheat. Let's get wheat out of the way because there's even less to say about wheat. I have just nothing good to say about wheat. There's just downtrend. It's just a downward, sloping market. You want to be a seller, be seller into rallies into this downward sloping trend line and into the 18-day trend line. I think wheat is it's too late to sell wheat, but too early to buy it, just on the macro and the bigger time frame. So I'm waiting for breaks back above, this downward sloping trend line, which comes in around, 590 right now. Let's call it $6 handle for the big round number for Chicago December wheat, and that 594 18-day moving average. That would open the door for a move back towards the 647 55-day moving average, the 659 100-day, and even a move higher towards, I think, that 200-day moving average, which eventually needs to get a test here up around that $7 mark. But generally speaking, still in this downward sloping trend line. Certainly this 50% retracement, probably up around the 660 area we'll talk about. But until we get above those levels, I'm just waiting for the market to bottom. KC December wheat, much the same story. Downward sloping trend line against the highs comes around 730. That 18-day moving average is about the same. Until we're back above that, this is just a market that's 818 and 5/8 there, or just call it 818. By the end of the day, it'll be a little lower. All areas of resistance to chew through on the way back up if we get there. But this is lower lows and lower highs. This is a downward trending market. Something needs to excite wheat, but hey, a little positivity on the day, not a bad look. And I know everybody's, looking for that harvest low type mentality, but this market's going to get leaned into and continue to go down until it doesn't. We're not even oversold on the daily RSI here on KC wheat or Chicago wheat for that matter. I feel like wheat needs its capitulating moment. I thought that might have been it back, on the WASD day. Maybe we're just retesting our WASD news flash lows before deciding that is support for wheat and going higher. I don't know, but it's a downtrend until it's not. There's not much else to say. Let's move on. I can't believe I even talked for 2 minutes on wheat today. All right, December corn. Uh, got only a few more things to say there, but along the same time frame, there's a downward sloping trend line against the highs. There is that open gap on the charts up around the 530 area. That's also around the 50% retracement around 520 to 532. The 18-day moving average at 580 or 480, excuse me. We got to get back above 480 to 484. Then that opens the door for a test of $5, and that 50-day moving average, 100-day at 514, and the 200-day up at 546. So back above $5, I think we go to 520 to 550, somewhere up in there to find resistance, test some of these old levels, and see what the market may bring from there. Now, that brings us to the smaller time frame now, right? So is there anything happening? You're caught between overbought, oversold. There's nothing going on the daily RSI. Is there anything happening on that smaller time frame right now for December corn? I mean, I hate to even put it up there just because it's like, what can you do? But okay, those downward sloping trend lines against the highs are still fighting there. We seem to be finding some form of a low or finding some supportive measure here. But, this 50% retracement from 467 to the highs after around 475. Okay, we're holding it. I don't know. I'm not. Took today all the way back, snapping through 480 and through highs. We go through this low, right? And yesterday's, this trend line doesn't really exist. I'm hoping for something to form there, right? But if we go below these lows, I mean, that's just a market resuming lower. And where does it stop, right? We go back out to that bigger time frame for corn. Yikes, it's ugly down there, right? Which, heck, I guess that's where we finish for corn, is take a step back on the daily time frame. COVID lows for 2023 corn were down around the $4 mark. So are we going all the way down there? I don't know. There's a lot of interested buyers. I'm sure 450 to $4, but we got to go to that price to find them, right? And that's the scary thing in the near term. So we shall see what happens. Well, that brings us into, I guess, a terrible segue for the time being, but. Let's look at crude oil. Because, hey, what are some of the things that could get corn excited right now? Well, you'd think this rally and this run-up in crude would have done it. I mean, I was kind of expecting it to have, but yet here we are, right? Nevertheless, crude off of a 63 low from May, up to 92.43 high just a couple days ago. We've started to pull back against that high. And a couple days ago, we were looking at this and thinking, oh man, we might need a couple dollar, or this might be the start of one of those multi-dollar pullbacks. If today we weren't going through highs, this ultimately, reversal on the 4-hour chart, having been higher highs, now going down through the lows of the day, and then, now targeting basically lows of this week. We go through those levels. We're breaking below, some kind of channel, it looks like, and trend line support. Then at that point, where's the next, levels of support? Equal legs down, this first leg down, extend it. 87 to 86 might be interesting. We know that there's old highs here. Haven't really tested back to it as support just yet on a real meaningful way. So maybe that, and it also happens to be a 50% retracement from the lows here at 77, 76, that swing pullback, and the lows of August to the highs now here in September. So, okay, a bigger pullback, I think down to 88 to 84, somewhere in that landing area is underway. And that's all inside of a much larger trend channel that, okay, might open up all the way down to 80 for that matter. So I'm not bullish, I'm not bearish crude, but hey, I'm not like closed-minded to the idea of a big pullback. mainly because I like to be a buyer in this big dip if it happens. But this rally in crude though, I think also right, you look at a chart of corn, corn didn't respond to it at all. So why would it respond to downside in crude? If I don't think that there's going to be that pressure on its back. But I do think crude trying and generally a commodity bid here is going to be helpful to all of our row crops at the end of the day. We know that on the scene now, oil seeds have become very important in that biofuel discussion. And segueing from crude here and getting us back to soybeans, um, let's take a look at some of our oil seeds. Um, the soy oil December contract here, full 50% retracement of its lows from May to highs after, almost trading, with crude there a little bit, right? A little bit more than the rest. Um, has pulled back, and not quite. 50% would be down to 55. I'm not saying it needs to get there, and I'm thinking that this kind of test of the 200-day and now the 100-day trying to come back above the 200-day moving average here, or test back down to this area around 57. I think this could be it. And I mean, we need to see the market get back with a 55-day now again to reestablish back in this range that we've been in, because you can't not kind of, we definitely have this sideways range here. Range. So the 18-day moving average crossing back below the 55-day, not a great look, but we would expect the market to come all the way back to retest that area around 61 if it's going to, go back above. We're coming out of oversold territory for the bean oil, so okay, why then, Dan, if we haven't really tested down into major support where you'd feel a lot more comfortable if we would flush down to 55 and then bounced, why are we thinking that maybe that's it? Maybe bean oil is the leader of the bunch here. Well, the bunch I'm talking about is, let's take a look at where canola is. Canola has pulled back into its testing below all of its moving averages and into its 50% retracement in a big three-wave move down. Okay, equal legs down as well, right? If you measure from 860 down to 760, that's a $100 or 100 point move. 820 down to 720, that's a 100 point move down to 50% retracements. To me, this looks like a market that reversed, got back above its moving averages. This has come back down to test them all. We need to get back above the 18-day, and if we do in canola, that's, to me, suggests a swing could be forming here, coming out of oversold territory, and a swing towards 950 and above would be next. These are all big macro swings that we're looking for. We need to now track the daily time frames to see if those swings happen. Otherwise, you're not a buyer down here until that happens. But key reversals, setups like that. Palm oil, 3 waves down, 50% retracement here on the November chart. You can see the 618 line holding there. 200-day. I mean, palm oil has generally been a bigger range down here, but okay, if we get support around these areas and a rally back towards highs, we would see, could see, a reversal and a reason to maybe get a little more bullish on these oil seeds. So if we continue with that narrative forward and we see, very big reason that, okay, we're into an area that you need to be thinking about, maybe a reversal for the oil seeds. And if not, right, if they continue much lower, it could, spark doom and gloom too, right? So that's the other thing, is that we're down at this area where if a reversal doesn't occur, things could get a little heated, and we could be right back down to lows again. And maybe, right, playing devil's advocate with what I'm calling for here, maybe this, soy oil chart needs to trade lower. And that's the could be the catalyst here. We can't deny that totally. Bean meal doesn't give us much hope or much to satisfy ourselves in either. December meal here, I mean, really, there's not much to be said for the meal chart. We are in a wedging sideways range until we're not. I would have said 380 to 360. So we're back down into that area. We're holding support yet again. I think we're going to go right back in the middle of this range. That's why, hey, we're down to the low end of the range here. If we bounce on bean meal, bounce on oil, what could that mean then for beans. Well, Novi Beans trying to get back above $13 today. Um, but breaking below that 100-day moving average yesterday, now below all of our major moving averages and testing that 1282, effectively 50% retracement. That retracement comes from the 1130 swing lows from, back in May through the highs thereafter, 1434. Beans have really just been in this range, right? 1256 low, 1282 low, now a 1290 something too low. Can't break out of this, 1378 high, 1440 high, 1393 high, 1412 high. So it's like $14 to $13, right? And we've just been sideways in this range. But that doesn't mean we couldn't break down, below these lows and couldn't, flush all the way down to where we've been. But in the near term, okay, are we thinking this oversold condition in the bean starts to get unwound at some point? Do we, have a little bit lower to go on the chart? We could on this daily time frame. Certainly, it's been lower lows and lower highs, but today's, I wouldn't say today is the reversal setup that it would promise to be, or would cause me to want to be a buyer down here either. But like the meal and the oil seeds, hey, we're down at interesting levels, right? In terms of the range. If we go below these levels, it could get very, very bearish very quickly. But if we capitulate, if we, which is to me means to say we kind of dive down very quickly and then come up equally as quickly back into the range and then start heading higher. Continuing lower from here, right, and testing below, and then on a snapback, not being able to break back into the range, and then turning back lower, that is a signal for us to go lower. So what I'm calling out here is it's kind of like the identification that trade setups are in the future, right? There's nothing to do today, but there's three outcomes that we can look for that if any one of those things starts to play out, there's something we can do. And there's 3 or 4 charts to kind of watch here in the soy complex, all together. So that's what I'm talking about, putting together a trade plan, watching everything. Do we get bearish here, the charts? Well, there's a very big reason other than the fact that we're, $1 off of a plus off the highs from a month ago to think so. But again, I think it's too early to sell or too late to sell and too early to buy here for the beans. But let's see what the, 4-hour chart says. See if there isn't anything we can't, identify to help us make those decisions more clearly. So going back, we had old support here down around 1330 to 1340. The market decided we needed to break down to test that area. It got a reaction off of it here. And it got a reaction basically back into the 50% retracement short. Not quite into it, but like we can visualize how this is like 2 steps down, 1 step up for the market at this point, right? Whether or not we were wanted to be a part of it or we're tracking it or things, we identify these steps in these tracks in the sand to try to identify who's attaching and what algorithms are attaching themselves in the market, see when they're active, when they fail out, and what that ultimately means for their next decision-making process. So the swing from 1281 low to highs after here. Hoping that this pullback here would take you to highs. It gave a good reaction for a couple days to get free, to manage risk, to trail stops to break even, to do what you needed to do to make sure that a winner doesn't become a loser is the idea. But then the market ultimately failed out. And it failed out of that full 50% retracement long. We had to kind of take a step back, right, to look at the bigger picture again and the bigger swings and where those levels might be. It broke back below the any kind of trend line we were driving from this low through this prior low at the time, which okay, is what it is. Trend lines are meant to be broken sometimes. You can see this other trend line from lows to lows in some kind of channel also now breaking here today. Right, so we are now down to just holding prior lows inside of a larger range. So there's really no trend to be had, is what this market's saying, between 13 and 14. All those lines you draw, hopefully the trend to hold, break. and we just whipsaw inside the range. But there are legs inside of this range that are holding some technical or some giving some technical reason to consider them. And the downtrend here hasn't actually been without actual 50% shorts, two steps down, 50% short, trades the target. Next in the series here, it kind of breaks out at 618 line, whatever. But nevertheless, I think there's something to be said for it. It holds. It was around a WASD day. We kind of let news days give them some wider breath. But then lows to lows here start to hold. And I'm not so certain that, right, until you're back above 1320, you really haven't started to break back above this range. And you could make a case that the low of the WASD day to the lows after is that area around 1312. So anyway, um, same idea. That there's resistance here, 1313 to 1320, very likely. Now, the next in the series short might take you from 1368 down to the lows. That's a 1330 resistance. I'm not a big seller there, but these are all levels that you got to at least throw up in the chart and think about on the way back up, if for nothing else as to just, have them as pretty lines in the chart. Downward sloping trend lines against the highs comes around 1350. So 1350 full 50% retracement off the highs, as well as this downward sloping trend line. There's some room for this, the market to give back a couple days or a rally here. And then, that takes you back in the bigger picture. Well, that's just a move back up inside the thing we're in. So again, the short term here, the short time frame, doesn't give you much to hope for on a day like today. But back above 1309, 1308, you start to get interesting in terms of what are some other levels to chew through. I think you let the market fight around down here. This 30, 40 cents down at lows, you let it chop around unless there's some other dignified, very V-shaped recovery that begins. Because the chopping around down here at lows, it's going to take some time for the market to then decide it wants to go back up in the range. But if it's going to do that, these lows will hold. You will hold some kind of support here, 1280 to 1290, right? So that becomes a very good reason to use, stops there if you're long. And if we break below, it's a good reason to maybe go with the flow of that sell-off, because we can look to the other beam complexes to see if there's breaks happening at similar levels, all right, and give ourselves a trade plan for being long, bullish or bearish in this market. But we at least know that, hey, there's a downtrend that began from 1400. That's not over with. We're down into a bigger supportive area. Be mindful of that. But something to watch for here, kind of going forward. Okay, let's take a look now that we've gotten through wheat, corn, beans. Let's take a look at our, I guess cotton here, just because I got it up, and then we'll look at the meats and other macros here in a second. December cotton today kind of doing a head fake break of some trend lines, but I think generally otherwise trying to form kind of a channel higher now. We seem to just form these trendline resistances the market likes to bottle up against and break, all kind of using this 18-day moving average as a reversion to the mean. The 55-day moving average now coming up as support here into today around 85.50. Market couldn't quite get there. 100-day is down around 83.31 and the 200-day down at 82.79. I think this is a market that is chewing and trying to break above our old highs. And a push back above here, 88 to 90, I think does accelerate, and I hope it does, towards 94 to 96. I think the production the numbers have dropped enough on cotton to think that, hey, we don't need to go down in price to find demand. I think that supply and demand are being met at these levels, which means, hey, I think personally, I don't see the slowdown in the economy, global economies that a lot of other people do. Pullbacks in the S&P are one thing, but I don't think the slowdown that is going to be, taking the wind out of the sails of consumer demand is there. And nevertheless, I see strong demand for cotton going into the rest of this year, just because I see strong demand out of Asia for everything. But cotton here channeling higher and holding above that 55-day moving average here in the near term. So, staying on the softs real quick though, rice here in the Novi contract, been trending a little bit higher. I think the daily continuous chart, you can kind of see how, generally speaking, there's been this kind of like higher highs and higher lows kind of trend trying to form. I think there's been a big pullback and a reset right in the contract roll here. But old contracts, trading 16 to 18 handle with, Novi Rice below 16 and just um, the general global situation for rice with a lot of countries closing their door. I see a bit of a pullback here. A 50% retracement for rice into this 1580 area, I guess from 1680 in the short term, right? The raw chart of Novi here. Um, and I know that there's going to be more liquid contracts out there, I'm sure, to trade as I start to ramp up my rice watch, so to speak. Um, but I see a bit of a channel, forming higher. So let's see what happens. I think there's, a bigger base in the rice market, but yeah, kind of eyeing that in the near. October sugar, we don't talk about it much, but um, I see the market pulling and starting to flag here against the 18-day moving average. You know, it's we talked about. I think I've talked about before. I certainly talked about with some clients this range that we were in, the breakout that we've had. The market generally targeted around 30, I think, was the number 29 to 30 from this. You just take this range, extend it off. But if it doesn't have to get there. But in the short term, this kind of channel higher that we're seeing back below the 18-day moving average would be the first signal for consolidation and reversal back to 24 that I'm looking for. So those that are interested in getting short sugar and a reversal signal, we're watching this 2650 area on the 18-day moving average for that to occur, as we are unwinding overbought conditions here on in the daily RSI. And there's plenty of support to the downside. We're just talking about wanting to go back and test those levels. Generally, I'm still bullish, though, this chart, right? Like, it's still an uptrend. But I do think some reversion to the mean can be underway. However, while we're above that 18-day moving average, and you can see there's some tests in the past, but we need a real, trust me, there'll be a true signal when it happens. But you can look back here in March, how, it doesn't do it, it holds above it, and then we go higher. That's the signal to almost buy the chart is on a pullback towards the 18-day. Breaks below when you get below and you test it as resistance. You can see how there's plenty of time below that, and the true break below to then get short for the true sell-offs that occur once you start to break below and there's a period of fighting over that 18-day moving average. That's when the volatility in these markets occurs. And continue to monitor it higher. All right, let's get into our dollar index, I guess, real quick. Still very much an uptrend. Kind of the same idea with sugar, this 18-day moving average. Look at that daily continuous chart. We're still above that 100 area, 100 to 100 to 102. It's the old range highs. The range was 80, 90, or 88 to 90 to like 100, that $10 range in the Dixie. We're now breaking above. Pulled back to test it. Are we in now a 100 to 110 range? That's the big $1 million question for the year. And how we behave now in this next pullback will tell us everything. When the dollar index decides to roll back over, break back below that 18-day moving average, come back down to test its moving averages and a reversion to the mean here. If we break all the way back down to 100 and then go below, this was all one big head fake, head and shoulders, whatever you want to call it, reversal pattern, and we're falling back into the old range for the dollar. If not, and we hold above, and we basically hold some kind of pullback and then trend higher, well, I think you guys all know what I kind of alluded to there. A dollar to 114, 110 range, whatever. 100 to 114 will be the new range for probably the foreseeable future. And that will actually produce a lot of currency trading opportunities that we'll actually start to talk about perhaps in this strategy of the week as well. The dollar was very quiet and otherwise untradeable for me for a number of years there, and now after these recent moves, that has changed everything. So we're going to be bringing back some of the ideas and concepts I used to talk about. I mean, if you go back and look at my YouTube channel back to 2012, basically 12 through 15, you'll see videos um, uh, of old content that we used to talk about in a very similar fashion that we'll be bringing back in a real way. So anyway, let's look at those feeders. Those Novi feeders up 0.8 of a point on the day. Just the intraday, the daily chart here, 18-day moving average, still above it here, pulling back to maybe test this support. I mean, what can you say? It's a trend until it's not. You can make a very good case for a strong channel to perhaps being formulated here. And there's a lot of support. Until you get below 255, we could still be in some kind of major swing higher. But the oversold condition now on the chart suggests to me that this multi-day pullback, that's about as much damage as the market looks like it could have done. And we're going to flip over to those October FATs, up 2 points on the day, and the December FATs up 1.8 on the day. Those both look relatively, uh, just really, really strong here, right? I mean, that's a different story to the feeders than what we're seeing. So they've pulled back to test their old highs here. Now is old resistance, now support. Haven't quite made it to the 18-day moving average. I don't know. I think if both feeders and fats might have another little bit of a kick higher here, see what they do with the new high, and if they roll over at that point, we'll be interested. But not much to say about these while they're trending higher, much like corn and wheat while they're heading lower. These markets are very much entrenched in a trend. We're not stepping in the way of that. October hogs, um, range bound, 86 to 80, the 200-day to 100-day moving average now, or the fight over that trend is happening. The 18-day and the 55-day seem to be the reversion to the mean. Generally speaking, though, piggies had a little bit of a 50% pullback here off their highs back into that 78 area. You can make a case for this potentially being another inside 50%, from the swing at 78 to 86, but um, you know, could be a little bit of a range. I'm get a little more bullish back above 86, but I am interested if we, being a buyer here, if the market could, put in a reversal either from these levels that we held off of today's low, or if we go back down to 78 to 76, we'll see, who's dancing down there, and maybe think about something at that point. But I don't know. Um, I'm not super interested at getting um, too excited about anything there until it really proves itself to me. All right, let's look at some other gold and some other macros and some outside markets. Gold, for example, been very sideways inside of a range. You can see that triangle kind of forming and that wedge on the charts, following up against some 50% shorts, some trendline support. I think a breakdown towards 1850 to 1800s on in the works here. That would clean up the charts, make this an A, B wave triangle, C wave lower, and 1850, $18, it gets interesting down there, and we'll see what happens if Fed policy and other things are driving Holt finding a supportive level. It could be an interesting place where gold finds a low and then heads higher out of 2100. Um, we'll see what happens here. The 30-year not really helping too much in that regard. Got a monthly chart out here. I mean, this is just a big downtrend for the 30-year, and it continues lower lows and lower highs. Bringing up that daily chart here. Doesn't give you much more to sink your teeth into. We've just been trading lower. There's clearly a trend line against this high here that is to be respected. And I'm not really interested until this market starts showing that clear center reversal and short covering. It's being very technical in its sell-off. I mean, this is a very clear channel. It's done this just about every sell-off it has. Respect the channel until it fails. I guess. I mean, it's almost like, that's the motto of don't fight the Fed. Well, don't fight the technicals in the 30, in the 15, in the 10 year, or in the 2 year and 5 year or whatever. Whatever treasury you're trading, uh, it's a downtrend, I guess, here until it's not. Um, at some point, though, I do feel like the buying is going to kick in. I just don't. We're just not there yet. And certainly isn't kicking in if the Fed pausing doesn't get people excited. I don't know what will. S&P 500, we've talked about this chart here in the past, but just to flash forward, March of 2020, we talked about that as the, COVID lows or the millennial Black Monday there. This sell-off basically found a beautiful low there on March 23rd. Met with new all-time highs. The swing from that low to new all-time highs, 34.94 holds in a big 1, 2, 3, uh, 4, 5. I know some kind of complex pullback. I'm not too concerned about the wave count and structure there. What I did care about was the break back above this downward sloping trend line, the supported 50% short longs, 2 steps forward, 1 step back, 2 steps forward, now 1 step back again that we're holding. Highs to highs extension is 4406 area, so long as we're above 4353, which we are still holding above, mind you. We're just in a bull flag, up here trying to break back above 4600. Can't break below 4400. I mean, we do, but we come back above it, don't we? If we do slide lower, equal legs down takes you to 4300. That's down into upward sloping trend lines. But really, the bigger level, somewhere 42 to 4100, retest of these old highs, bigger 50% pullbacks around 4067. I mean, any of those levels are supportive, and I, want to be a quote unquote buyer at. Um, it's a really tough pullback to watch, right? And this could, in the short term, be a signal that we're pulling, further back. Taking it in a step further, going down to the 15-minute chart here, in the very near term, kind of had a 50% retracement off the highs here, but it's certainly lows to lows right now. Resistance 44.13 to 44.20 if the market continues with a little bit of a bounce. All right, well, that just about wraps up here the live trading room. Had to actually take a brief pause there, kind of walk away from the charts for a sec to wrap up something with another client. But anyway, it's been one of those days. And again, here on the S&P, right, in these macros, there's bigger pullback here. We got lows that if they don't hold, right, there's bigger levels below us that can, and we'll continue to watch that. So, without further ado, do check out every day here from Zaner Ag. Check out our Zaner Ag phone call in with our very own Ted Seifried. He is our chief market strategist, and every day has been recording that for our viewers and our listeners alike. I'm Dan Hussey with Zaner Ag Hedge. That information is available in the comment and information section of this video. Wow, just throwing all together here at the end. But 312-277-0110. You want to have a chat with me, you can find me on Facebook, Twitter, or send me an email at dhussey@zaner.com. Thanks for joining me. This has been your Strategy of the Week for September 22nd, 2023. Have a great day, everybody. Have a better weekend, and we will be back with you as price action develops. Take care, everyone.